you see my screen?
Yeah.
You're quite right in the sense that if we just explain this little IAS 2, the important bit is here that this is the important little bit that I've highlighted. It says inventories are measured at the lower of costs and of net realizable value. So in your G4G company, if you're adding a fee to it, an interest, a charge, whatever, so that you actually get rid of the tax liability there, that's fine. But the other end of the coin, with your loan account growing, you need to account for that growth or that increase in your personal capacity.
So which is the IRP 6, correct? Because that's what I submit to the government. I have to add it to my IRP 6 income.
Correct.
On a yearly basis, am I right?
Particularly the second one, which is February every year. You can still sort of you do one at the end of August, and you do the one at the end of. Let me just look at something here quickly. Yeah, you do the one end of August, and then you do the one end of February, and you have the opportunity that because they realize that you don't necessarily know everything by the end of February, you can make a third top-up payment before the end of September. So in other words, we're talking about the 22-23 year, which ended last week on the 28th of February. You have up till the end of September to make an additional top-up payment. But if you don't, for your provisional tax, they say where the actual income of $1 million or less, to avoid any penalties, you must be within 90% of what your assessed tax will be. And in your case, when you're over R1 million, you've got to be within, you've got to be 80%. So if you sort of say my taxable income for 2023 is 1.6 million rand, and it turns out that on the assessment, when you submit your tax return, it's actually 2 million rand, you'll be okay because you're on the 80% threshold. But if you say 1.6 million and it's actually 2.6 million, then you're going to be paying penalty on the shortfall, even although you make a top-up payment, the third top-up payment.
See, the G4G, so originally what you'll see there, I'm not sure if you picked it up there, so there's multiple investors in it. I think it's that if you open the trial balance, the PDF file there.
PDF file will do that.
Whichever one it is. I think it's. So my initial investment was 1.4. Yeah, you see there, loans payable. So if you open up that one,
yeah.
So loans payable is 1.8. Okay, it doesn't show the opening balance, right? But it was.
For that, I should go back and I should actually. What I can do there is I could open the TV. That probably shows it better.
Correct.
No, not that one. I did look at the.
It's either that one or it's another attached email that I sent through to you.
Yeah, there we go. Let me just push this up. There we go.
Yeah. So investment.
This is your account, and it starts with 1.3.
1.3.
And then December ends at about 1.9.
1.9. Yeah, correct. So it obviously had that 643,000 growth. So we're only looking at the 643,000 growth value.
Yeah.
Not the full value. So it's obviously that will be then part of my tax, but it's still 45% taxable. I don't have I don't ever work with the tax brackets, whatever.
Yes.
But I assume it's the 45%.
You're in the 45% bracket. The moment you go over, I tell you now, the moment you go over 1.7 million, you're going to 45%. for any additional income over and above that.
So what am I at the moment, at 40 or 45?
I think I saw your provisional tax being something 2 million something.
Yeah.
So that bet that over 1.7 million will be taxed at 45%. Look, was a sliding scale.
Yeah.
If you work at your average tax, it's probably something more like 38% or something like that, or 35%.
Yeah.
That's because of you don't get taxed at the lower levels, and then you get your rebates and all those little goodies.
Yeah, I know some of my taxes we've actually put on Amanda's salary, so that we're just trying to stay out of the tax bracket. But it actually comes part. So yes, we can do this IAS 2 thing in the G4G, but in the battery automation portion, there we are not trading at all. So there it's pure income. So just to explain to you, in the G4G, so what we do there as a company, so you've got the multiple investors. I've got my money, Anthony's money, Natasha's money, Jenny's money, Jenny's husband's money, and I think Natasha's father's money that we injected. So if we have projects like we have the Vodacoms or then the Cape Town, all that kind of stuff, we usually, current automation doesn't have the cash for it. So we would buy from larger players that's got more capital. We would buy the product line from them, but you would import panels at a lower price. They would add, for example, 20 or 30% margin on it, and then we would buy from them. And then it goes into the project. So once we had the ability to isolate capital, we then did not leave it in current automation, because the current automation, let's call it the potluck of cash. It's very difficult to manage. So I always have this huge fight with Jenny. She gets red hot under the collar, because I always say, Peter steals from Paul and Paul steals from Peter, and there's no money for anything, because it's always going, either the stock is being increased, or it goes overseas, or it's stuck in limbo somewhere, right? So there's never cash available. Hence the part of my reason of creating these sub companies, so the cash stays in these companies, which gives us the ability to purchase directly from Trina, for example, the solar panels. So we would then buy wholesale from Trina rather from a sub supplier, which puts up a markup. But then what we do is we add a minimum markup onto it and sell it to current automation. So it's literally current automation is my client. But now obviously the cash, then obviously that's why you'll see the growth so fast, because it's not based on an interest basis, it's based on a per sale basis. So that's why
you should actually call it like I don't know, maybe kind of a handling or not management, but yeah, sort of a handling fee or something.
Yes, it's a handling fee that we do through it. But what we're trying to do was to get the profit to the investors as fast as possible, because, for example, like Natasha's father is retired and he wants to live off the capital, right? So he's got a monthly check. Now Whitey, which is Jenny's husband, he was in the police force for 30 odd years, so he got his pension paid out, so he put $1 million in there, which then obviously increases, which is his salary, right? And the same with Natasha or Jenny or Anthony. Anthony sold a house and whatever the case is. So the profit that he had extra that came into the company, and that's how we're accumulating and growing it. But that's how that one works. But it also trades. So it buys the solar panel, sells it to current automation, but it can also sell to other clients. Now, remember how business works. So you have, let's call it 1 million electricians out there, and you have a large few players. So some of these large few players will never buy from current automation because they see us as competitors. So we then created this clever sideline company called G4G, Go for Green, which has, from a name point of view, nothing to do with current automation. So I've then employed someone working from home, targeting these companies that theoretically don't want to buy from us because they see us as a competitor. So they don't care. They just see a company and see a good price, Bob's your uncle. So now it's trading as well. So you'll see some of that trading portions there. So that's almost a company on its own that will grow. So we've had a little bit of problems with the salesperson that's been going. She's non-consistent. So my original idea was once she can pay herself continuously, then I would employ a second person, and from there a third and a fourth person that's physically employed in that company. Now currently that person is not employed within G4G. That person is running under current automation because it's a company that we want to run the overheads, right? Because the profits are too high. I know Jenny now at this stage, she's battling. She was telling me that suddenly in the last few months the profits went super high, so there's lots of taxes being paid. So I was trying to make sure that current automation doesn't get overloaded in terms of profit. So yeah, but obviously I do realize my mistake with G4G, so somehow I'm going to have to sit down and think of a way to do that. Either we activate some of our salaries. Obviously, that's going to add again to the IRP5 or the IRP6, or you put overheads in terms of expenditure for the company, like a rental income, that kind of things. Because that's originally what our idea was with that Four Fuckers company that we created. So
the thing is for you, where you obviously have multiple streams of income, it'll be problematic to try and put it into another salary because that just gets taken off your ads on the other side. But as you mentioned, Jenny or Natasha's father, if that is his income, and he pays his tax on that, but if that's his only source sort of like of income, then that makes it less of a problem. The other scope that one has is to have show a portion of it as interest because everybody in his personal capacity has got something like 20 odd thousand rand that they can deduct as from a tax, being tax free. I'll give you the numbers somewhere I had it here. Let me just see. I think it's 23,000 exempt with my little exempt stuff. Individuals, 11 page 11. Now, if a father is over 65, a person's under 65 has got 23,800 a year they can take off from tax for interest. So they don't get interest anywhere else. Then if you show some of it as interest, they can have that tax free. If you are over 65, you can have 34,500. So that's nearly 3,000 rand a month. It's not much, but you got to try and take everything you can.
Yeah, for sure. So everything is
and in your case, I know you're not terribly keen on maybe other investments than property, but you clearly have the capacity to buy a 350,000 rand annuity per year on the 27th of February, and it'll cost you 55% of that value because the other 45% you save in tax, and then you put that money into an annuity product, a retirement annuity, and I can make some suggestions where to do that. And that keeps growing so that it's just it's like a bit of squirrel money.
Yeah.
In 5 or 10, 15 years, you want to use it, you can cash that in, and when you have less of an income problem, then that makes sense to have retirement and living annuities. And that can apply for the other people as well. If they don't need all the money, I would strongly suggest that they don't do that. So definitely you can have up to 27.5% of your income or your taxable income. You can invest per year in a retirement annuity up to a maximum of 350,000 rand a year. That 350,000 rand equates to about 1.27 million. So if you have 1.27 million as an income, you can use up to the maximum of 350. And as I said, that 350 in real terms, it's costing you 192,000 rand. So you're getting over 160,000 rand tax free.
So there's a twofold fork in that choice. Yes, I agree with that. Is to put the money away into an RA, which I have no issue with. But the whole objective was uh, we need more capital. The more capital we have, or cash that we have, the more we assist current automation, for example, or the companies, because it means more stock, more sales. Because this machine, it's almost like a cooler machine that you have to keep a boat going, a steamboat going. Without the cash that readily available, that engines dry up. So yeah, it's either we have to pay the personal tax or find some kind of other way of putting load onto the company to minimize the profits.
I see what you're saying. You want to keep the loan amounts. You don't want to pay it out to the individuals
Yeah,
where you can. You want to keep the money in the company.
Yeah, so if you look there, the value that I think that was in the company is now, for example, 5.4 million. So the objective is to make that 15 or 20 or 30 million. Now, my original idea was to get rid of Sasfin, right? So Sasfin, we've got a 20 million rand loan, or not a loan, you call it the capital that they give us on a monthly basis. Now, it's maybe not, yeah, so that facility is not, it's not like 1 month is 20 million bucks. It's, for example, maybe 6 million or 7 million or 10 million per month. So you keep on rolling it. So now you got 2 months, because obviously this month is still on credit, and then the next one comes in, and the two together ends up at 20 million. So you constantly have payments going in, payments coming back, payments going in, going back, but it equates to 20 million bucks the whole time. But part of that is they take their slice of the pie, which is could be 2-3 million per annum. So I thought to myself, right, if I've got the spare capital, I want to grow, so it becomes bigger and bigger and bigger. So ultimately, I, in theory, use less from Sasfin and I use more for myself. I become my own financier, right? Because it's not going to them. But now, obviously, this whole concept of the IRP6 is going to be quite hard, because now you're suddenly going to lose a lot of capital going out the back door. Let's call it SARS leakage.
Do all the people that you have there, do they need to draw money other than paying their taxes?
Yes, they will have to draw it, because the only other income that they have is their standard IRP5, which they submit on a yearly basis, which is their salary income. They have no other income other than that specific income.
Well, the only way that I can see that you can grow this within the loan accounts you have is that clearly people can't just fork out taxes from nowhere else.
Yeah, correct.
So if I put in $1 million and the thing is now grown to 1.5 million rand, but I don't need the 0.5 for the year, but I need to fork out 100,000 rand for taxes. Then I withdraw the 100,000, pay my taxes, and now my loan account is 1.4 for the next year, because it then becomes capitalized. You've accounted for it. Then again, as it grows to maybe 1.8, now you have to pay 150,000 rand. You take that off, and now the thing. So it'll grow with whatever, shall we say, handling fee you put on that, and the tax on that handling fee, pay that out, so that people are not short in their personal capacities.
So do we physically have to remove that capital, that investor's person's money, out of the bank account, put it back into his personal account, pay the taxes, and then put it back in? Or only withdraw the tax portion of it?
Just the tax portion.
Just the tax portion of it.
Unless, as you say, the pensioner guy, maybe if he needs some of it, let's say his money's grown with 400,000, his taxes are 50,000, but he needs a further 100,000, then he has to withdraw the 150. So his thing is only grown by 250, sort of thing, whatever the numbers are. But that at least the motivation should be to tell people, well, as much as you can leave there, you will get the benefit because if you have a handling fee per percentage, it applies to everybody. The guy that's got 2 million is going to go with, if it's 10%, he's going to go 200,000. The guy that's got 500,000 only going to go 50. So the more they can keep in the account after paying taxes, then at least they can grow that way.
Mm.
But then at the end of the year in February, you got to put that money into their account so that they can account for it and pay their taxes.
So that they can pay their taxes up. Yeah, I think most of
Now I'm just saying now I'm saying in your case, where if you don't need the money and your account is drawn with 700,000 rand, you can take 350 of that, put it in the RA.
yeah.
You have to take it out, but at least
So
you
what's
get the tax benefit of
so
that.
let's just understand an RA doesn't have to run a mature time period. Can you put it into an RA and pull it out again?
You can only pull it out after you're 55.
Okay, but for example, I'm 52, so in 3 years' time, right? Can I put it in at
You can pull it
55
out.
and pull it out again at 55?
You can't. You can only pull it out to the extent that it's less than 247,000 rand, which it won't be if you put 350 in. But what you can do, you can convert it to a living annuity that can pay out a monthly income to you. So maybe that way you can pay an income to you. You can take less income out elsewhere.
Okay, but it's still stuck up to the age of
It's stuck.
55.
Yeah. And it's essentially stuck after that in the sense that a living annuity works on the basis that whatever your capital value is of your living annuity, you must draw somewhere between 2.5% to 17.5% out of that per year.
Hmm. That's typically not the way I want to go because of the capital growth that we require within the company. So, is there any ways, obviously, to purchase property? But obviously, that's still you still have to pay taxes. I mean, from the taxes that's paid out to SARS, though, what's ever left, you can buy a property. But then again, I need the capital. So, like I said before, my objective was to take the people that support me, that stand by me, is to make sure that they can retire comfortably. So, but if I live up to the age of, let's call it 70, and then I decide, okay, well, stuff it, I have had enough, I'll give it to the kids, whatever the case is, I don't want any money anymore, right? I want the same for them. I want them to have, to be able to go home and sit and do whatever they want to. They don't have to work forever. So yeah. It's someone taking care of
the point, your idea is perfectly fine. You have to just adjust it for tax.
Okay.
In other words, if there's a 200, if for say, take for Jenny for instance, I don't even look at the numbers now, but I'm just using example.
Yeah.
Say her loan account has grown by 200,000 rand for the year because of this handling fee, and she has to pay 40,000 rand tax. You can give her the 40,000 rand out of the account, she pays the tax. Next year she starts off with 1160. Then it's the growth on top of the 1160 that she then just pays the tax. So she still has growth, but it's growth less tax.
Has to be growth less tax.
Growth less personal tax, whatever it is. And there's then various, you can also even call some of it interest, call it a 23,800 rand of that money's interest. If they don't have interest elsewhere, they can show there's interest and not pay tax on that bit. And then everything else is called a handling fee or a profit share, whatever you want to call it. Maybe one can call it a profit share. But you're not going to take it out without being able to account for it and account for it in terms of tax.
Yeah. The only other way, obviously, without pushing your own tax bracket even up more, is, for example, adding children or something as employees. But then you can't do that whole method that we're doing with the loan account growing. For example, what I do with current automation. So, like Amanda, I've activated from a payroll point of view an extra because I pay $3,100 here, or $3,200 I pay in Canada for this house. So that money is a salary out of current energy automation. So that's another company that I have, which is my employment company. So current automation contracts current energy automation. So she gets paid a salary out of CEA, which is still part of our IRP6, right? But that money then comes to paid her to her on a monthly basis, which she then gives to me, which I transfer internationally. So that then I get the money here in Canada to pay for the house on this side. So yes, we pay the taxes, but and the same with Javier, So I use him for Javier to get some of the capital out to this side, which is a payroll that's activated. I was just thinking.
Well, you see, it's a limit. It's a limit that people they go up to a level of about what is it? With you using kids, they eventually then also become taxpayers
Yeah,
effectively.
so they are taxpayers. So Javier is paying taxes, on his income. So he does. We do
Right.
a yearly tax payment for him. So he's a tax resident still in South Africa, although he's
Right.
a local citizen, which is actually part of the other problem, because I think that was my fourth email. At some stage, I haven't done it purely because I just don't know how to tackle it. Is I have to declare my worldwide income because I'm a resident in Canada. I have to declare it in Canada. Now, whether that's got to do with just my personal income or whether it's got to do with all the equity I own in all the companies.
It's got to do with in both South Africa and Canada have got a policy of that you declare your worldwide income.
Me personally or company wise as well?
Personally, personally.
Personally, it's got, so it does not have to do from a company point. I don't have to declare all my company's profits.
If you have a company in Canada that declares its profits there, it pays tax there, end of story.
Yes. And South Africa, the company as an entity. So
Same story.
The entity,
Same
okay. So
story.
the entity would declare its taxes, although I own the entity. So I don't have to.
So if you can remember it this way, entities are resident based.
Yes. Yes.
And individuals are worldwide based.
Yes. Okay.
Unless in the entity they're sort of saying, let's say current automation has got a 20% share in the Canada company, that's when it becomes complicated.
Yeah.
Because then you got to do sort of consolidated accounts and declare those incomes.
So I think because I did find
so the model of the story is don't let the companies have shares across the waters.
Yeah, that's exactly what we did. Is we separated the entities totally apart. So Current Automation Canada is a Canadian registered company with a Canadian owning. I've got 100% here in Canada, so it's got nothing to do with South Africa, and vice versa. So I think that was actually a clever way of trying to do it, rather than trying to extend current automation across the waters.
Right, so we can come back to some of these, but let me just see if we go through your questions. Are you comfortable with the IRP6 and the ITA34?
Yeah, so one of the reason why I asked that was, so remember what happens now with, which I just explained, to the income that Amanda sends through to me on a monthly basis for the rental year. So IRP6 I submit to SARS. They then do an assessment. They send me an IT34 telling me, okay, I haven't paid enough tax, blah blah blah, right? But in my bank now, more money flows through than what the IRP6 says, or the IT34. How does that almost like counterbalance thing work? Would someone not at some stage go like, hey, wait a minute, there's you're defrauding us from more income, because more money is flowing through your bank account than being declared.
Uh, yeah, let's just start at the sort of the beginning. Amanda gets the money for the rent as her salary, and she pays tax on that, and you issue IRP5 for her for that.
Yes, correct. So
That goes into her annual tax return in her ITR 12,
yeah,
and she pays the tax on that. But she transfers the money to your account,
yes,
and you transfer money to Canada.
yeah. It's just because my wife is not comfortably with the international payments. I can theoretically ask her to get access to her bank and then transfer it from her bank account straight to her bank account on this side. It's just because I've hit it now last year for the first time, where my credit cards just stopped working overseas, and they said, now I've exceeded my discretionary 1 million rand expenditure for the year. Because I travel a lot, the things I do and all that kind of stuff. So it just went out there. And obviously with the payments, and I also sold a car and I put the money on this side so I can reduce my payment on this side of my new vehicle that I bought. So I could.
The IRP6 is not a separate tax system. It's just a calculation for SARS to know what they can expect.
Okay.
And it's just for SARS to really get their money when they want it. They don't want to wait till September after the tax year. They want you to account for it then.
Yeah.
And if you don't account for the right amount of money, they want to penalize you. So IRP6 is not a separate tax or a separate tax system. It's just a calculation at that time for them to know what's going on. So Mr. Commissioner could say, I've collected so many trillion money.
Okay, but
because they work on that.
But still,
but now I do know that the banks. I don't know what exactly they. I can't answer you the question. I'll have to try and find out. But I'm not exactly sure whether they report cash flows going abroad or not. But they do have access to your account. So if they wanted to see what goes through your account, they could spin you for an audit, and then you can explain what it is you do. Your wife has given you this money; she has paid tax on it, and you're paying for a rent here because you're also a resident here. So I think you're not doing anything illegal or anything untoward. So you could explain it in the case of. So I think that's the only way it will come up per se. Your ITA 34 was when they assess you to say, now you've entered everything in your tax return, and here's your assessment to see if you paid enough taxes, and you haven't paid enough, then they will say, okay, pay up this amount. So that's how it actually works.
Yeah, so it really
when you have investment, they would advise the bank for any interest that you've received in any investments and stuff like that, like all the other financial institutions do. They call that the IT3 something. So that's really how it all pans out.
Okay. Yeah, so it's only really if someone pulls an assessment on you, feeling that you have been screwing them over in terms of income, that they would like to see the.
I would suspect the likelihood that you might have a query on money flows abroad would be is when you go beyond the million that you can put abroad without asking SARS. But then I think up to 10 million you can have their approval to say
you want to know. Apparently the 10 million, from what I understand, is the 10 million is, if, for example, if you immigrate, then you can, or in general, you can do it once off. It's not an annual thing. An annual thing is 1 million. But a once off, you can do 10 million or something like that.
Yeah, there's one that the Reserve Bank is interested in, one that SARS is interested in. Okay. So let's just see here. Do I have some answers here? I won't get back to you on that, but I know it is probably something like that. I think it's up to R1 million. You don't have to tell anybody.
Yeah. Correct.
And then from a million to 10 million, I think you have to ask Reserve Bank. And then over 10 million rand, you have to ask SARS.
Okay. Yeah, well, I'm not.
But I speak under correction. I will confirm that.
So
I know there's a million and there's a 10 million.
So my original idea was, so this is maybe the G4G and my personal taxes, but my original idea with battery automation is I was wanting to take the profit from that. So battery automation, forget now about the solar panels and the local purchasing of the lithium ion batteries that we do through G4G, is battery automation has a value of 4 million rand into it. Now the 4 million rand, some of that money has been utilized to buy Victron stock from Victron. Now typically you would utilize the SASFIN financing, and the SASFIN financing we would buy, for example, $1 million worth of inverters, put it on the shelf, and then resell it. Because the more you have on the floor, the more you sell. The less you have, because it may sometimes only be 7 days delivery, but that 7 days to a client sometimes means a lot. So we found from experience, having more on the shelf, the sales actually increased, right? So we sacrificed let's call it the 3.5%, because if you take SASFIN, I think they take 3.5% value that you loan from them on a 30-day period. So obviously if it becomes a 60-day period, then it becomes 7%. So current battery automation now pays for that CAD or for that stock immediately, right? Loans current automation the money. They purchase the stock, pay for it, and then current automation owes that money plus 3.5% back to battery automation. So that comes back into the coffers of battery automation. Whether I don't think it's a loan account. I must just check with Jenny on that one.
But that should then be a profit in battery automation.
I think so. I must just check with her. I think it will be a profit in battery automation. Now the same is going to be with the lead acid batteries. So we purchase a container a month from Rita in China, which is about, let's call it $100,000. So for community's sake, 1.8 million bucks, right? We purchase on a monthly basis, which rolls in, gets sold, roll next one. So we've got, for example, a March shipment, an April shipment, a June shipment. So you pay 10% down, they manufacture it, they ship it to us, we advertise it, it gets sold. But we then sell that batteries at cost plus 10% or 7%, sorry, 7% to current automation, which equates to the same SASFIN 7% that we would loan the batteries for 60 days. So it becomes the financier of the company. Now, part of that profit, I'm wanting to almost say give to myself so that I can get it to Canada. Because I need to purchase approximately $5,000 every 60 days or less to build up stock levels on the side. Because ultimately, it's like I said to you before, I need to open up a spa and I've got a bread and I need a bread and milk. And now obviously the lifetime of these product lines is not it doesn't become wasteful after 6 months or a year. The stuff can stand on the shelf for 10 years and still be sellable. That's the nice part of it. Other than that, a model would change, that it becomes redundant product line. So that's my idea. So my basement, I'm starting to stock level the product line. So I'm going to be building stock over the next year or two. I'm just going to keep on shoving that $5,000 or $10,000 in it, because if you think of $5,000 or $10,000 or $5,000, I approximately make easy 7% on, let's call it half of 4 million, $2 million a month, a month. I make on that side just because it becomes part of the transactional business of current automation. So that's how I get the money out of current automation into battery automation. So I firewall current automation from being overloaded in terms of withdrawals, because I don't want to sacrifice the growth or the stability of the company. And that's why I created it into a separate company. And that separate company, I now need to get the money into Canada. So that's my problem. So it either has to go through from an employment point of view.
The only other than taking some sort of fees or interest or whatever, which is let me see, because if you take if you declare dividends in battery automation, you pay 20% dividends tax,
30%.
withholding tax.
Yeah, 30%, right?
Uh,
No, it's 20%. What's dividend tax now? Less.
Dividends tax is dividends tax. There's two tiers. It's 20%. I think if you go over a certain level, it becomes more. Dividends tax is applicable. It's 20%. Prior to that, it was 15%.
Yeah, I think it's 20% now. But you said it's got two tiers.
Yeah, but now if you in your battery automation, you would have to then pay your company tax.
Yeah.
And then you pay your dividends tax on top of that.
Of course, you pay your company tax on the profits, and again on top of that, the dividend tax of reduced.
So but now it's going to 27%. So 1,000 rand becomes 730 rand, and then 20% on that. You dilute it quite a bit.
But 30 plus 22 is 52.
But then 1,000 rand becomes 584 rand that you could pass over to Canada.
Yeah.
Because then that dividends is declared to you, and you can transfer that into the company, and that can be again your equity that you put into that company, and with that equity you buy stock.
Yeah, so the only way is to do it through dividend tax. Either that, or if Jenny does it that other way around, it just adds up onto my IRP 6, and the IRP 6 will go through the roof.
And that is, I've worked out, when we talk about maybe your personal tax, I worked out some numbers here. There we go. There we go. 58 is actually then 40.6%. Whereas on marginal tax, maybe you're paying around about 37-38% to get the money clean from all liability. So I guess no, you can't do that. You that shareholder in battery automation.
Yeah, I'm the only shareholder.
Is Amanda a shareholder anywhere else?
No, she's only a shareholder with the trust. So remember, everything owned by me is owned by
the shareholder. I'm talking about a company.
Yeah, she's it's only the trust. She's only involved with the trust, not from a company point of view.
What sort of money are you pushing through battery automation per annum?
Well, it was now only created last year, so the monies are now only being created this year. From, let's call it, I would say the first income came through December or January. The first income came through in January. So obviously it's a Feb to Feb is our financial year, so obviously the Jan Feb declarations we'll have to do, and then from there onwards. But now, on a monthly basis, there's at least 1.8 million that's moving through it. So the profit of that is 7% on that. Plus the Victron stuff, which let's call it another $1 million. So let's call it 150,000 bucks per month.
Yeah, I was thinking that if it wasn't that, I think a small business corporation um, that's got a limit of 15 million rand turnover. 20 million. Okay, so a small business corporation works like this. You have a shareholder, but that shareholder must be shareholder in that company only. They can't be a shareholder in other companies. So that immediately excludes you because you're the shareholder in various companies.
Yeah, correct.
But if Amanda, for instance, was the shareholder in that, you could trade up to a gross value of 20 million per annum, and you have a typical individual kind of tax structure in that that the first 83,000 rand of your profits are tax free. The profits from 83 to 365 is 7%, and then 365 to 550 is around about 21% marginal, and from 550 over, then you pay 28%. So the first 550,000 now on 20 million rand, did you say you make 7%?
Yeah, 7%.
So let's just say you trade for 20 million times point, and that's your profit. Nothing else. Then you would have 1.4 million rand profit in there. Let's say nothing else happens.
Yeah.
Minus 550. You would pay about your profits for the year. Let's say you make that your 20 million is 1.4 million rand.
Yeah.
And instead of paying 28% tax on that, which is 392, you would be paying something's not working right here now. Let's just get ourselves here. But do you foresee that it's going to grow bigger than that?
Yes. Remember, this is only the first year, so that capital is going to accumulate. So, argumentative sake, the 4 million bucks. So all that, well, not all of it's coming to Canada. Remember, so some of it's going to be staying behind.
So just talking about the company itself, you must look at the parameters or the limitations for qualifying as a small business. Is that the gross income can't exceed 20 million.
Yeah,
the moment it does, then it becomes a normal company.
Yeah, it's going to exceed that very quickly. It will. So you talk about income or turnover?
Turnover.
Turnover. Yeah, it'll supersede that. Let's call it within the next 2 years.
Or you could limit the trade through that it stays with that because of the beneficial tax.
See, my problem with that is I don't have an issue creating argumentative like battery automation 2 and battery automation 3 or whatever the case is. The problem comes in managing these companies. So each company requires an accountant, and each accountant requires to finalize the books for it and then submit the taxes onto it. So it becomes a web of problems. I don't have enough people.
I understand.
So for example, I already have X amount of accountants. I can't double up or quadruple up on that by creating company on company on company.
I just thought that was a sort of a small sideline that will paddle along, that it could fall within that ambit of trying to look for ways and means that you can save tax.
So one of the problems, and that's also why, so remember, current energy automation was created specifically as an employment company because current automation is over 100 million. So part of the BEE rules apply to current automation. I'm not allowed to have X amount of white employees and so forth. So the way that I surpass that is to contract the work out to current energy automation. So its sole income is the salaries. So the salaries is the income for it, which is far below the 100 million value, which I can then employ whomever I want, wherever I want, that kind of stuff, right? So current automation then employs the current energy automation staff to do their work. And that's why it was created to do it that way. So the issue is once I have a single company becomes bigger and bigger, I pretty much have to get rid of all my white staff. And that's another conundrum I'm sitting in.
Yeah, I understand. That's the issue.
Yeah.
Okay. Well, I'll try and give the CBA thing a bit more thought, but for now,
I think if we,
now the donations tax or the dividends tax is probably the most likely route to do.
Yeah. I even think from a G4G point of view, maybe we should restructure how the income works rather than the loan accounts growing is maybe thinking of the actual company operational income growing and then declaring or adding, for example, like YT on a payroll or adding Natasha's father on a payroll so that their taxes are limited in that sense. They're on a much smaller bracket.
Yeah, well, you can probably do that. Just
even if we do so, for example, that's the other question I wanted with battery automation is like Jenny said, okay, why don't you add expenditure to battery automation? You know, like anything that I have, even if it's my grocery bills or whether it's I was even thinking of my payment for my house, my monthly payment for my house, because remember it doesn't pay rent. Current automation pays the rent for the storage of the product lines. You know, so I can try and put expenditure through the company to load the company's profit. You know, to lower the profit.
I have a problem with that is that if you do have some sort of sales audit, you're gonna be running around in square circles because then you're gonna say, is this a legitimate business expense?
Yeah.
That's the difficulty of putting people on the payroll that don't legitimately work there, which makes it awkward. And if you catch the high wind, then maybe later on you get SARS attention, and you don't really want to have that.
No, for sure. I was just thinking of realistic ways of trying to minimize the let's call it the tax leakage legally.
Yeah.
You know, how do you legally so it still falls within in that bracket?
Yeah, it's just that is that your accountants have to actually verify that that is legitimate expenses, and so you don't necessarily want to add that risk to it because okay, you might be saving tax, but you might be adding risk to it, and if you then audit it and found out that it's not kosher, the penalties are quite severe.
And that's originally why I was thinking of you know that company I spoke about earlier to almost like buy properties with it and load these sub companies with legitimate rental space. You know, just to minimize the once again the profit. So it goes actually into equity, and the equity obviously will grow over time. So $1 million building in 10 years time will be $3 million or $2 million, whatever the case is. So you grow your equity in property. So it becomes a loss to the company by running. It's a running loss, but the equity increases.
Yeah. Bear in mind that obviously your equity only increases to the extent that you have genuine business expenses, and then once you have a profit, you pay your tax on that profit. So it's only the after-tax equity or after-tax profit
Yeah.
that grows your equity.
Yes.
Same thing like I'm saying with these loan accounts.
Yeah.
You can take the interest, but you can pay everybody saying I'm paying you an interest fee of this for your money, whatever percentage it is, and then I'm giving you a handling fee. So there's already a small portion that they don't have to fork out. 20,000 if you take people paying at least 30-40% tax, that's 8-10,000 rand less tax that they're paying. So all those little bits and pieces do help.
Hmm. I have to just think on a much larger scale than the immediate tax. You know, the immediate tax is one thing, right? So we'll do the immediate tax thing, the immediate payments. But I'm trying to think on a long-term basis. So my ultimate goal is if I can have 20 or 30 buildings on my name or our names, which I then give to the children. So yes, it's in a trust, so that when I die, those properties will transfer to their names, and only if they dispose of that property, only then the capital gains tax is paid, right? But if they, in their family name, my children, argumentative sake, would sustain the running of the rentals, it could be a monthly income for them. Yes, obviously they'll have to pay their IRP6 or whatever the equivalent value of it is in Canada because it will be worldwide income. But at least throughout their lifetime, they have have this substitution of income. You know, so I'm not planning on getting rid of the equity and obviously paying that out at any given time. Yes, if I really need the capital, I will need to do that. But I'm just thinking from a larger perspective, how do you take money from one generation to a next generation to a next generation without getting rid of the equity and having it growing and actually creating an income for them for a lifetime? That is my concept.
Well, obviously, there's two things in a company or in a trust, whatever you want to look at it. Uh, you have assets in there that's either financed by a loan account or by equity
Yeah.
or by the bank. Those are the three sources of income to pay for the assets. And typically, like if you take the simple example of a house, if you paid it off, you have the equity or you can loan money again from the bank, you can buy another house. But you actually have two houses and you're only paying on one for that matter.
Correct.
And one can then use the same principle in a trust where you then purchase a property and you look at whatever expenses you can put through that to minimize the profits that you take. Because the only thing with the trust is you gotta allocate that money to the beneficiaries, otherwise you pay tax in the trust.
Correct.
And the trust tax rate is very expensive.
Yes.
So it doesn't necessarily make sense, but that's how you sort of would grow wealth in property and for that matter on the stock market or through a unit trust as well. You buy it now and you just keep it there. So it's a question of using money that you're not going to have to withdraw every 5 minutes. But the structure that you're trying to put in G4G and even for CVA, if you have in mind to say, whatever fee I'm raising there, whatever I'm calling it, less tax. That's the equity that can grow, or they can stay there, they can grow. Because next year that becomes the baseline, that becomes the 100%. So you go on that. So you don't have to pay tax on that again.
Yeah.
And that's how you can then pull up capital to be able to do these things.
Just to explain to you why I'm wanting to keep the capital in the company for the growth portion of it. If you look at the market share, so Anthony did a analysis of SARS. He somewhere got it off the SARS website that close to R1 billion worth of panels was imported, I think Q4 of 2022. And that's all got to do with cash. You have cash, you brought the stock in, the stock went into the market. So yes, there's maybe $5 million there. But if it was R1 billion, I could have turned $1 billion with 10 or 7%. Yes, if you had access to all the clients, which is not the case, but that's the potential of the market. You know, if I look at the projects that we're doing at the moment, we've got project after project after project, which is megawatt after megawatt after megawatt. So 2023 is stepping up from 2022. You know, so the amount of panels flowing is even higher. Like I said to you the other day, we ordered over 3,000 panels already sold. You know, so we're ordering another 1,600. The only reason why I haven't ordered more because I don't have confirmed orders, and that's 4 bar worth of panels. You see what hoekom ek skrikkerig is to just make decisions, because here's 4 million, there's 2 million, there's 6 million, there's whatever. There's, for example, a CA now we ended with from 179 to 225 million. So we're entering the $250 million turnover or even higher for next year. And that's why we're battling so much with the people. So I'm really concerned that I'm overextending myself, that the growth level is too fast. You know what we spoke about the other day, is that that pinch. So, but the problem is to try and avoid the growth level, you overload your people. And I'm finding already that everybody is almost like they need almost to be working on a 4-day week because they're cracked by a Thursday. The workload is just
that's critically important, because without your people you can't do what you're doing.
Correct. So I'm sitting.
And then all the numbers are just a mathematical exercise. They don't mean anything if you don't have the people to make it happen.
Yeah.
So that's what I was talking about. That was going to look at the sustainable growth. What can you realistically go with, so that you can keep going and keep going forward and keep people motivated? Because once they lose heart and motivation, or they feel, wow, I just can't cope,
Correct.
then they become despondent and what have you. So then you don't get the best out of that.
Correct. So then that is that balance that I'm fighting at this stage. You know, is that how do I keep my people happy? Because you can't throw a donkey that's worked 24/7 for 7 days more money. The next week that donkey is still tired. You know what I mean? So I have to come up with some kind of a load shifting or something, and that's why I'm going onto the employment drive. But even if it's on different company levels, so each company is run on its own merit, on its own steam. So you don't create this one big collapsible company that just comes down like a house of cards. And that's why I'm trying to generate the company after company after company, that they become companies on their own. Same with Canada. It becomes companies on their own.
Yeah, as you just said, but you've got to sort of manage that it doesn't become too much of a monster to handle in terms of the compliance side, the accounting side, the tax side, and all of that.
And that's why I said I think the right thing is to rather have the capital flowing in the companies rather than the loan agreements, so that we can have the ability to employ the manpower to reduce the load, to create it manageable amongst the people.
Yeah, but inevitably when you have more people, you're going to have to you would want to look at more generation of income and profits.
Yeah, correct. Each one of these companies have merits. For example, battery automation can run totally on its own. If I had to employ a manager on its own just for that company, that just runs the capital on that specific company, there's enough clientele independent from current automation to keep it busy. For example, battery automation, there's maybe, let's call it 15 suppliers in South Africa with mass batteries. And those 15 companies, I know at least 5 to 7 of them 10 years ago had a $250 million turnover. Don't know what it is today. I stopped asking the questions at that stage. So battery automation has huge potential, huge. For example, just to give you an explanation, so that was the lead acid industry. Freedom One, which is one of the main manufacturers of batteries, their turnover jumped to over $1 billion. I started knowing the company close to me when they were working out of a garage. That's when I started dealing with them. So they went within a 5 to 10 year period from a garage to a R1 billion turnover company, and that growth is not diminishing. It's going to become maybe a 5 or 10 billion rand company very soon. That's how fast that company alone has done. Just to maybe explain to you the small things I've been doing in Canada. So I went to Calgary, to Edmonton last week. Yes, we did ice fishing, but maybe you should know how I operate. I do leisure, but I do business as well. So the people that I sat there with, we're wanting to do forklift batteries. So he's very good in doing the oil field industry. He services a lot of the oil field. He's now installing 10 megawatts of generators for cryptocurrency in Alberta, right? But I said to him, why don't we do what Balancel does? Now, Balancel is one of the battery manufacturers there in Cape Town. They were right next to our old premises, and they grew out of that premises and became a bigger company. So we started dealing with them, supplying us lithium-ion batteries. Now, yes, what makes the difference between them and Freedom One? So they specifically entered the forklift industry. So the forklift industry is typically lead-acid batteries. So you've got the counterbalance of a forklift. It creates weight. But now, obviously, a lead-acid battery requires 10, 12 hours worth of charging time, right? Which is inefficient. You put 130% worth of energy back into a battery to get 100% worth of performance out of it. So you lose that 30% in energy from the charging point and the time period that the forklift stands still. With a lithium ion, you use maybe 105% worth of energy to fill it up again, right? Or 110%, let's call it worst case. But rather than waiting 8 hours, you can put it back in 3 hours. So now your charge periods, now that forklift can operate much faster. Subsequently, they've gained business level with Coca-Cola worldwide. That's how good they've gone. So they've been recognized by big players. But the issue with this thing is you have a battery that is heavy because you have to put it in a container that's quite heavy, which you then load. So it's not something that you can put on a ship and ship worldwide, right? And my suggestion to my Canadian potential partners here is, why don't we get the heart of that product line, rebuild it in Canada, get the local steel manufacturing made, and reproduce that in the Canadian country or cities. So we're going to start maybe with Calgary, because he's running his company very strong in Calgary as well as in Edmonton, the oil industry. But the warehousing industry is that huge. So there's manpower, there's capital available to be able to do it. Now, yes, it's maybe 50,000 Rand per battery. That's without the enclosure. But we can then go the extra mile of actually getting financiers for it, which he says he's got access to, right? So rather than selling the battery to the client, you sell a cycle to it. So every day it charges and discharges argumentative cycle. So out of a lead acid battery, you're going to get maybe 600 cycles. So it's going to cost you X amount to run that system. Let's say, for example, it's $100 a day or $200 a day. So you charge them $200 a day, but you loan that battery to them. But you know that battery is going to give you 6,000 cycles rather than 600 cycles. So now you make your return of investment in less than the life cycle. Maybe in a 3-year period, you're going to get your battery cost back, which you're going to give the money back to the financier. So the financier is going to loan you the $5,000. They're going to get their $6,500 back over a 3-year period of time. Because remember, the interest rates are quite low here. But you're actually going to get your $6,000 or your double up on the money by renting the product line out. So that was my discussions which I had with them. So that could even explode from a Canadian point of view, and that's the whole idea, is to take that division that's independent from the power supply division, which I'm wanting to do in Toronto, which I'm trying to do that portion. So the ideas are flying. There's lots of business opportunities. I just need to set up the company in such a fashion that I create managers in each city and each business entity. So the battery automation, the G4Gs, the power automation, because even power automation is taking off with the projects. It's becoming a multi-million rand company now. Is to set it up in that fashion. And my role at the end of the day is going to deal with the managers. I'm already finding myself, I don't deal with the clients. I only deal with my people. And ultimately, I can see I'm moving away from dealing with the people. I'm actually just dealing with managers. I'm setting up more managers. I'm just dealing with managers. So all my day is just sitting with managers, which deals with sub-managers, which deals with the people in the field. And I think that's exponentially going to grow. But ultimately, like I said to you before, I'm not personally chasing the finances. Yes, I enjoy the traveling and I'm enjoying lifting my life up in that sense, because that's my outlet. That's the way that I enjoy my life. But I think that urge of looking after the people around me is there. The urge of creating a wealth that's going to stay within the family and transfer it from one generation to the next generation. So teach them how to take these companies further, so it becomes an income for their generations down the line. So I think, help me think with the larger picture in mind, rather than the immediate tax problem. The immediate tax problem I need to understand. I need to clarify, because I think we come up with a interesting methodologies of doing things. But it's ultimately, those are just business ways, that we do.
Right.
So I think if we do structure the thought pattern, is to say, right, maybe not invest it in here, keep the money in the bank, pay your taxes, but let's maybe purchase a property, maybe do it that, whatever the case is, so that I can keep on getting this funds growing, because the more capital I have, the more it can grow. Unless you sell the company, and I'm not wanting to sell shares in any other company. It's none of my idea. I'd rather grow naturally. And I don't want to just grow on the let's call it the power failure of South Africa. I'd rather grow it on different avenues. So all my eggs is not in one basket. So it's, for example, batteries in Canada, or the power supplies, which is consistent. Energy businesses, all energy related, but it's consistently in different markets, different segments, different companies, continuously supplying an income. And how to convert that to a passive income. For example, Airbnbs, or whatever the case is, or properties, even if it's just industrial properties, that creates an income. Because it's got to do around the taxable portion. How do you shift the taxes around so that you optimize it? So I think your thought pattern has to be quite large, not small. Think larger than smaller.
Yeah. Although there's the only thing in life that's certain is death and taxes, eh?
Yeah, like I said, some days I wish I had almost like a criminal advising you what to do, just to make sure that you can get the right way of doing taxes. Just think out of the box way. Like I don't want to go the criminal way, but I want to think out of the box way. Because the whole world has always been set up in these little boxes. Do this, and this is how you're going to pay your taxes. But I want to think, how's the legal loops around this stuff? How you can legally minimize your taxes, even if it's shifting from one company to another company and investing it into properties or whatever the case is. I don't know how it is. I just need to find an avenue to analyze it from a bigger point of view.
Yeah. Well, as I said, in a trust you want to put growth assets, because then that can grow and you're not stuck with the growth in that. Essentially, as you say, you want to put the properties that you want to, not something that you want to buy and sell like a speculation, but you want to, as you say, buy some industrial properties which you either use or you rent out. And that is a recurring sort of income. It pays for itself. You must make use, the way that you minimize taxes, and the way that you grow your wealth the best is to use somebody else's money. So there's a fee to that, but then it gives you exposure, and you ring fence the expense, but your asset can grow. That's the purpose of a trust in a nutshell. So if you make excess money in these entities and you form a trust and you say you buy some industrial buildings that you either use yourself or you rent out to other people, you bond it as much as you can, or use other people's money as much as you can, and you pay the fee. Because that expense you write off against your income. So you show very small profits, you ring fence it, but eventually you pay it off like you do for a house.
Yes.
And then after 15 years, you paid it off. Except with commercial property, you don't get 20-year bonds, you get 10-year bonds. But even so, that can be a constant income stream for those that are involved in their trust. As you say, some of your employees or the people that are stood by you. Uh, that's the way I would suggest that one really looks at the bigger picture and to say what sort of monies do we need for this or for that, and then we can try and establish that and make them beneficiaries of that trust.
So I think I've got the right.
I'll give you a bit of a caution though, is that SARS has taken out its binoculars on trusts. They are going to be quite heavy on administration and looking at trust per se, because the reason is they don't know the rules. In a company, you know these are the rules and they can apply them. In a trust, each one is different, or they can have different little bits and pieces. So looking at the administration side and also the accounting and the recording of that, there seems to be quite a bit of a drive to change that, because then, SARS is hungry for money, because the government is hungry for money. So there's a bit of a clampdown on that. So I was going to just make sure that with your trust, even there, again, you have your paperwork and all your stuff in order. Sorry, love, can you bring me some water, please?
Sorry, man. Ek praat jou.
I don't talk so much. I praat myself, yes.
That's why I prep myself beforehand with a water and a Dr. Pepper.
Have I answered your other questions, or have we discussed your other questions? Have we been through all of it?
I think we've gone through all of it. Ultimately, you did not give me an answer I wanted. I wanted you to have told me, man, maak so en so en so, en jy hoef nie tax te betaal nie. But you basically just confirmed to me that the good old rule of thou shalt be paying taxes until I die has been confirmed again.
Well, we're going to just make sure we pay as little of it as possible. That I can try and confirm.
That's, I think, the idea is to formalize the hello.
Hi to the man.
Hey, how you doing?
I'm doing well, and yourself?
I'm good, man. I'm good. Nice to see you.
Yes, you too. Did you see my pictures from what's happening in Canada?
I see. I mean, you're having these snow dumps.
It's a dump outside at the moment, man. It's just powder.
Oh, we in South Africa, we don't have those things,
So I must actually still send you my calendar. I think I must do that shortly. I'll do it maybe after Monday. I'll send you my updated calendar. So I will be in Cape Town.
Cheers, bro.
In May somewhere.
Okay.
So I'll pop around because I'm wanting to go and sit down and balance out about the battery business in Canada. So it's not something I wanted to do via a Teams meeting, because I sometimes feel the Teams meeting is just so impersonal, whereby if you sit around a table with someone, you get more business related things done.
Right.
So once they give me the go ahead, I will then also get my Canadian friends to come out and sit around the table and get to know the product line. But I'm planning to be there in May. June I'm in Europe pretty much the whole month. In July, I'm in Namibia for half a month. But that's just holiday with the family.
Yeah.
But yeah, definitely May I'm going to come through. Then we can sit around the table again. We can have a chat. But I think maybe the Canada kind of ideas, it's easier for me to do a Teams in an environment like this. With Johannesburg, once I'm in that pool, I get pulled in 1,000 directions with all the people in the office. So I find it beneficial for me to be isolated versus being in the office. But there's also the benefits of having your hand over the matters in the office. So that's why I think I've got a healthy operation to a certain sense. Being away and being in, being away, being in. I just need to raise the management around me to be able to handle the ideas.
Indeed. Did you want me to chat further with Jenny on this G4G that is going to be added to the personal taxes and that?
Yeah, I think do so. I think what we need to do, we spoke about it the last time there, is work on a even if it's a hourly fee or monthly fee or whatever it is, so that we can start incorporating it in. And I think I just need to be able to refire my time period to be able to discuss matters with you. And the same as with Jenny. I think what Jenny's problem is, Jenny needs that silent period, right? So I've tried now to create the rotational period where they work 4 days at the office and then 1 day at home. So for example, like Jenny will take this Friday and work from home, and Natasha maybe the next Friday. So they'll work early morning and then take the rest of the afternoon off, just to give them a bit of relief. So I think in that period of time, that morning period of time, it's rather let them do other work. For example, like this, the discussions with you, so that you think out of the box. And that's why I think it's going to force us to push some of that workload down to the additional accounting staff that we have employed or will still be employing, is that they can deal with the number crunching, and they can do on the focusing. Because I think the big problem I'm finding with Jenny, for example, is like she's just too overloaded. So that's why she's not spending time with you, because she just doesn't have that extra 5 minutes.
Yeah.
So it's trying to ring fence their time frames as well.
Sure. Just while I've got you on the line, I didn't send it to you, but I was just talking to her, and she sent me. I know you see millions of graphs and stuff like that, but let me just share this again with you. Are you still there?
Yeah, I'm still here.
That's what your cash flow looked like for October. She's asked us to send me just 1 month.
Yeah.
For what's the name? Basically, as you see, when I've done all of these, normally you see the opposite lines of the zero line. But to make it more meaningful, I actually took the outflows and the inflows and the balance. So you will see the blue and the green colors pretty much follow each other in tandem. So it means that as the money comes in, it goes out.
Yeah.
What happened here was that on the Friday amount, you got a big amount coming in, and then expenses were paid on the Monday.
Yeah.
And then, because then all of a sudden this red line, the balance also jumped up quite a bit to 3 million, but it's been hovering around about 500,000. Because I remember you when you were here in November, we were talking about looking at triggers and stuff like that, what can do to sort of monitor the cash flow more accurately. But from that, for that particular month, you can send me more months and I can do a longer period, then one can see how that flows, because pretty much in that month, 39 million came in and 39 million went out. And your cash flow hovers around 500,000.
Yeah. So usually what happens is I think just before financial year end and those months just after that, I'm finding quite a bit of cash going out of the company, whether it's bonuses being paid, or whether it's the tax going out to SARS, or whether it's late payment from suppliers, or whatever the case is. Or even we were overstocking over the December period. So, for example, we would order a lot of stuff and then suddenly it would come in, kind of thing. So those months, the March, April, May, is usually months that you feel the company is sinking. It's gone, it's dead, it's close the doors.
Yeah.
But it's all got to do with cash flow. Now, I know I personally haven't had a cash flow meeting with her, which is now going to be coming up, I think, just before I go to Iceland. We're going to have that meeting. So I would love you to do that, and I'd love to look at it further. Maybe we look at the dangerous months, where the cash flow takes a knock, so that we can almost identify and say this is where the money has been going or has been diminishing as a result.
So, we, as I said, I explained to you, this from my point of view. I don't know if you've given it further thought as well, but obviously, uh, I want to try and interact with Jenny. I don't know to what extent I'll do with Natasha, because she's obviously more than just the general management side. But don't know.
I think
whether you give it further thought as to how much you want me to be involved, and
I think
what time you're looking at.
Yeah. How's your time frame? Because obviously now it's fine because it's at evening, right? But you obviously run another company during the day, so I can't just say, "Hey, Des, can we make an appointment for between 9 and 10 kind of thing on a Friday?" Because it's going to interfere with your operations of choice.
Yeah. Well, some days I work from home, and I'm pretty much my own boss. I can shift things because I also for my Joyce My company, I do things after hours. Like the past, we're busy with a Zimbabwe food project, and last weekend I spent putting a business plan together for the Reserve Bank, so that we can see whether we can get approval for. It's a project that's going to cost us something like 45 million rand. And so I had to make sure that I put a decent business plan together for that.
Okay, so
now waiting to hear from them.
You're flexible hours, so you're not bound.
I'm flexible. I can't necessarily say that I can always answer within an hour, but if something is happening, I can reasonably quickly respond.
Okay.
Let's say within 24 hours or so.
So if I argumentative sake, let's just say it's feasible and it's doable, right? So we're going to be activating that rotational period of time where, for example, the Fridays, the managers are going to work from home for the morning. If I then say, right, rather than Jenny just working on her office work, is that she can maybe schedule an hour or an hour and a half meeting with you. It's, for example, every second Friday, right?
Right.
Or even worst case, once a month, right? Just to discuss out of the box thought patterns, because I think if she's got the silence around her head, she could think of better things, and that's the whole concept. Isolate yourself so that your brain can think of out of the box scenarios.
Right.
You're still working. Yeah. You're still working, but you're just not working on the crunching work.
Yeah. Absolutely. I'm flexible. I can, if I know that's the kind of the thing that we want to do, maybe specific dates, I can shift my days around that I'm available for that, and that I'm not in the office with ears that keep me, because as I said, I do that even for myself as well. Some of the, at least most of them work 1 day from home, sometimes 2 days from home. So we struck it. That's sort of a new normal for us now.
So I think even from my point of view, so even if you say, right, maybe once, maybe I don't want to force it on her throat as well and say it every second week, but even if you start with once a week with her, once every 2 weeks with her, or once a month with her, and maybe once a month with me, it gives me time, especially while I'm in Canada, right, to put my mind together with the different stuff. And bounce the ideas off you, because I think I explained to you my larger concept, what I was wanting to do. Part of which I haven't discussed with you is I'm planning next year to roll out more branches in portions of Johannesburg, because it can take you an hour to get from one side of the city to the other side of the city. So there's clearly business lost in those environments to competitors, because it's easy to deal with someone that is 5 or 10 or 20 or 30 minutes from you than someone that needs to drive an hour and a half to get to you. So I'm wanting to create these sub-companies, either from a letting point of view, or once again from an equity point of view of purchasing the properties. So I'm not looking at 30 million or 20 million rand properties. I'm looking at a one and a half million rand property. Something that's neat, something that's clean, something where I can stock the property. I can stock, so I can write some of those big costs off, some of the profits off, which then obviously will move into the equity of a property.
But is that sort of like for the commercial market or is that for the residential market?
It's for the remember, we've got all the facets of the company. So we've got residential and commercial, but we deal with I think it's, I always say 5,000, but I think it's 14,000. We deal with a few thousand clients, right? Companies. And those companies are not always residential. It could be industrial. It could be whatever the case is. It could be telecoms. It could be whatever the case is. So yes, and we do have a residential portion, but I can't tell you there's 10% residential because I don't know. You just get the inquiry whether it's part of those 14,000 customers or whether it's an end user. You don't know. And we don't have someone that I can put towards it and say, this is the residential customer, this is the industrial customer. I can only look at the product lines being sold. I can tell you the product lines have grown from this month to that month. Like maybe I'll send you an email from Rhino just to show you the growth in the different areas, that we have achieved. It's just it's like maybe 5 slides,
I was wondering, for the markets, like even in the residential market, I know we spoke briefly about it the other day that buying this meter will be, you have to pay, take years to pay it off. But there's a different thing with these SARS for this year,
yes,
like for the residential market, to say, whenever you put into solar panels, you can get 25% deduction on your tax.
correct.
And for businesses, 125%. Now, I know previously the rule was the 50-30-20 rule that you could write it off, which was quite beneficial for me. So I know that in the park where I am, Bill Rawson, that's big in property, as you know the name. His daughter and my daughter went to school together. And so he's the landlord that I'm with now, and I know that they put massive amount of panels on and they selling that back to the grid. So they've obviously made that transition. But I'm just thinking, load shedding is really such a problem that one must look at being quite a force in that, because I did speak to your guy, Harry. Unfortunately, his prices, whatever he's given me, is not so sharp as what is in the market. So I don't know if that is just because you're buying from the secondary supplier or whether you're not importing it direct.
What we try and do there is, so you get most of the people that install the stuff, so they'll take the equipment, slap bang it straight against the wall. So what we try and do with our solution, so from us, we call it a electrical compliance point of view. So if you do your electrical installations, you need to split your AC from your DC cables and all that kind of stuff. You put surge protection in, etc., etc. So can someone touch it, all that kind of stuff. So most of the installation, the people don't add those components to it because it makes the system costly, right? But they're not necessarily compliant. So they just put it in, get the order done, and Bob's your uncle, having the cheapest way. So what we've realized with that is you can go that cheap route and get a lot of work, but your problems or your call outs is so high, it bogs down your manpower, right? Because that didn't work, or that thing on site wasn't tightened fast enough, and so now your servicing going back and forth from sites are so high. So we try and say, right, we'll miss that cheaper installation and we'll focus more on the more expensive installations, purely because it requires virtual zero interaction there afterwards. So you can focus on new business or reoccurring business all the time. Especially if you look at the leading product line is maybe the Victron product line. Then the secondary is maybe going to be the Dye or the SunSync. But then you can also get, for example, the Grow Watts or the Experts and those cheaper versions that is hitting the market. Yes, from a cheap version to a Victron is maybe 3 times the price. But once again, you can see it. I'm a lot on these WhatsApps and these forums and stuff, and the amount of complaints. This thing doesn't work, or the communication doesn't work. The communication stopped, or this banged, or that banged. Now imagine you've got the amount of installations we have, and you have to have a continuous of a service department. So now you have to activate a service department just to deal with the problems that's rolling in, that's quadrupling on a daily basis. So we made that executive decision, stay away from the cheap way of installing it to the correct way of installing it.
I was looking at comparing sort of the dye and the sunsilk,
Sunset.
and as I said, the pricing looked at is about as much as 30% difference, which is quite significant.
Yeah, I don't know the different stuff. I just know that yes, we're not the cheapest in the market, that I have noticed, but the way that we install it and the way that we put the solution together is manageable for us.
Yeah.
You know, so I know by all means that's why we actually prefer the non-residential markets, especially if you start dealing with the bucky brigades, if you want to put it, the guy running from his bucky. So if you look at the SunSync or the dye, it's actually run by a company in South Africa, CNBM. So CNBM stands for the China National Business Model. It's owned by the government or the Chinese government. So originally SunSync was brought in by a company called Haddles. Haddles is a family from Bloemfontein. And they had traditional lots of money, millions. They had lots of shops and stuff. The father had lots and lots of money. Then obviously the growth came, and he got bigger investors. And he had people invest from Mauritius. So they bought like half or three quarters or whatever the company, put in billions of rands. So they got billions of rands worth of stock flying around. So they're getting the big projects. So they were importing the SunSync directly. What happened the one day they went like, stop your bus. You can't buy from us directly. So the Chinese forced them to buy it from CNBM. So everybody from the dye point of view and the CNBM point of view, from the SunSync point of view, because it's the same product line, the dye and the SunSync comes out of the same factory, buy from CNBM. Now we also buy from CNBM. So our pricing structure is very similar to most of the people. So it's not like they're buying a cheaper one. Every single person is forced to buy from CNBM. Now, yes, maybe if you purchase a few containers at a time, that the price is that 5 or 10%, but not at 30%. What also could be the case is if you look at a lot of our invoices, so our line items doesn't show the discount. So if you look at our invoice, right at the bottom it says 10% discount. So it adds it, or 15% discount, it adds it to the values on the top. Now, I hate our pastel system that it does that. I would prefer that each line item showing the discount, but it shows at the bottom the 15% or the 10% discount there, which people don't always see it that way. You know, they don't. They just look at the line items. I've had this argument with my accounts department a million times, and I just gave up after a while. You know, you fight the battle that matters.
Okay.
But anyways, thank you very much. I know it's pushing late at night for you. Appreciate your effort, and yeah, let's.
Well, so we would maybe try and just so that I can also know a little bit more specifically structure maybe a time amount and an amount that goes with that, then we know you don't have to question it or I don't have to question it or wonder about it. So
Like a
we
retainer.
give some thought as to what maybe some sort of level of retainer.
Yeah. I think a retainer is the better way of doing it. I'll chat with Jenny. I know with Andy, which is in the UK, we pay him a retainer, but obviously there's a lot of submissions with SARS and stuff that he does on a monthly basis. So it doesn't matter what he does, we just pay him a retainer. So I think even if we work from ourselves and we say, right, we argumentative that we're going to be planning 3 or 6 hours worth of consultation per month, let's turn that into a consultation fee and just do it. Just, you know, let's put that onto the books, because at the end of the day, all that's going to happen is if the money is not spent, and she's going to kill me all the time because she tells me all I do is spend. It just goes straight into profit, and the profit goes to SARS. So current automation.
See how brilliant you are. You've come up with a tax solution. Huh?
For me, current automation has always been, like I said to most of my managers, it's that machinery that needs to be kept alive to pay everybody's salaries. That's to me this concept. I'm not trying to make that company worth more and more, get to a point of selling it. No, it has to be that engine that creates the money for the sub companies or the sub instances and feed us over the long term. It needs to stay stable. That's why I said I refuse to reduce the capital of current automation for the extra companies like the Canada company. That company is individual. I'll create the money somewhere else for these companies. It'll come. I have no concern about that. Just keeping the baby alive, keeping the baby sustainable, keeping the baby functional. That's my aim. But add it, I have no issue. Let's keep it going. Let's keep the engines fueling. If you're there to keep the engines fueling, then we've succeeded.
Well, what maybe you must do is, because I have greater flexibility, you travel around and you do all sorts of things, maybe you must look at your calendar.
Yeah.
And then you must maybe slot a 2-hour session that you and I can talk.
Yeah.
To catch up and see what items do we need some action. I can go away, do it the same day. Once you've had a chat with Jenny, I can also talk to her. Every 2 weeks I can have a session with her for half an hour, whatever is necessary at the time. And at least that way communicate, because there's the part that I'll communicate with you guys, and then maybe there's some stuff that I go away and do some stuff here and then come back for the next session to talk about and say this is what we found, this is what we experienced, this is what the research is about.
I